Can a person comment or comment just to make sure that you guys can see my screen? Anybody? Doesn't matter. Just making sure you guys can see my screen. Currently, it should be on the charts. Anybody? Okay. Yeah. All right. So my screen is up. Okay. All right. So let's go ahead and go over the formations. Okay. So now. Okay. Thank you. Okay. So let's see. One of the things I teach you guys is do not trade against the trend, right? So based off of the picture that you see here, based off of these charts, the one you're looking at just now in this time frame, what would you be looking for, M's or W's? W's would be trading against the trend. So you would look for M's, okay? So now let's look for M's along this here, okay? Let's see, I might find one right here. Nope, there's one right here, okay? Which is basically last week on a Friday. All right, so what did it do here? This is a M formation here, first leg. Peak formation, this right here is a peak formation. Why is it a peak formation? 1 second. Why is it a peak formation? What did the market maker do? The market maker pushed up so quickly and then pulled down. This would be considered momentum trading. When the market is moving one way so fast, it tempts traders to place trades. So this blue candle right here is obviously a long candle. Okay, so it convinced traders to buy, but look how fast they pulled away after. Okay, so they trapped the buy traders here. Those who were buying, they trapped them. Okay, now here's another one. This is another peak formation right here. Okay, they came up and then quickly pulled down, trap traders up here. Okay, now when you draw support and resistance, you have to make sure you draw it at the if they trap traders long, place the the horizontal line above the highest body. Okay, not the candle, the body. All right, so here we have this formation. First leg form right here. Came down, came back up to retest that price. Okay, so this peak formation was made. So automatically, even if the rest of the chart wasn't in the picture, you should automatically put a horizontal line right there. Why? Because a peak formation is made. So now traders are trapped there. Regardless of the time of the year or anything, traders are trapped there. There's many people that put in trades for years. Okay, so traders are trapped in every peak formation, every M and W formation. So you want to make sure that you put horizontal lines there because that would be used as your support and resistance later on. Okay, so you draw your horizontal line there. Now you wait for price to come back to that area. All right. So you waited, and then oh wow, you see that the price actually came back up there and wicked it really bad. Okay. So when it wicked it retested this peak formation here. So now automatically you can think, oh, now that's a first leg. Now let's see if the body will close above the first leg. If it does, it's not a valid M formation. Okay. So it wicked it, but it did not close. It actually closed down here. Now this is an engulfing candle right here. 1 second. This red candle right there, that's an engulfing candle, the one with the long wick. The reason why is because we are allowed to use the engulfing candle's top wick on an M formation, not the bottom wick, the top wick. Okay, So this wick right here, 1 second. That top wick right there, we can use that plus the body to see if it engulfs the previous candle. Okay? Does it engulf the previous candle? Yes, it does. Now that's on an M formation, use the top wick. On a W formation, use the bottom wick. Okay? So it engulfs the previous candle, which means this right here, perfect, perfect example. This was actually NFP, guys. It formed a formation. Normally, I don't tell you guys to trade trap days, which is Fridays and Sundays, but this is just an example of a formation, okay? Not an example of what days to trade, okay? So this wicked it, did not break it, came down, formed an engulfing candle, formed an engulfing candle. So now what happens? After this candle closes and confirms that it is an engulfing candle, you take entry. Okay, you take entry. Now look what happens after you take entry. It drops. How much did that drop exactly? Over 100 pips. Plain and simple. Easy as that. Just follow the rules, mark down the checklist, and then you'll be able to have successful trades. Okay. Now, where exactly would you get out of this trade? Okay, so you enter off the engulfing candle close. So once this engulfing candle closes, it confirms the M formation. Then you enter the trade after this candle closes, which means the open of the next candle. You take the trade. Okay. 1 second. All right. So once you take entry here, you look for your exit. Okay. So now, where's your exit? Your exit is where traders got trapped on the way down. Okay. So where traders got trapped on a short. All right. So M formation forms, take entry. Now you look for where traders got trapped. Okay. So now look right here in this area, traders got trapped short here, right? Because they faked them short and then pulled back quickly, right? This is actually a W formation right here, but you wouldn't take that because that's against the trend, right? They went short for a couple hours. They induced traders to short, then they pulled that back up quickly, okay? So this, let me delete these so you guys won't get confused. Okay, this gray box right here, traders got trapped there. They got trapped short. So you look for exits on the M formation where traders got trapped short. All right, so now you put a horizontal line where? Where do you put the horizontal line? At the lowest body of the candle. Okay, of the lowest candle. All right, bam, right there. Because traders got trapped short. They didn't get trapped long, so you put it at the bottom. Okay, so you adjust it. All right, so here is one exit. This is one exit right here. Okay, there's many exits, but this is one exit. This is the first exit after this M formation formed. Okay, first exit. So you hit your take profit, and it keeps going down. Why does it keep going down? Like, isn't it supposed to stop? That's why my take profit is there, because it's supposed to hit my take profit and then reverse. No, it can keep going down. The point is, the take profits that I show you guys are the ones that are going to hit, where price is going to go to. It's going to go there. Okay, so it comes down and it breaks right through it. All right, now let's one thing I'm going to tell you guys is this, because there are multiple take profit points, you can place more than one trade off of after the engulfing candle. Okay, so there's actually one. I'll actually explain a little after. Let me just show you guys the next exit. Okay. All right, so it keeps going down. So why does it keep going down? I'm going to show you guys why. Let's take a look back even farther. Okay, so I'm gonna draw. Let me see. Actually, no. Yeah. Let me show you guys another take profit area. Okay. It's all the way back here. Like I said, it doesn't matter how many years, months, or whatever. It doesn't matter. Okay. So this is currently where the price is. So I'm going back over here because the current price bounced off of something. Okay, so we have to figure out what that something is. All right. So now look over here. I'm gonna delete these two. All right. Now we're looking for an exit. Okay. So this is gonna be the second take profit. I'm gonna draw a line, and then we're gonna see exactly where it is at the current price. Okay, where the next exit would be. All right, so the reason why I went back this far is because this is where price was previously, and there's traders trapped where price was previously, you know. So it actually dropped to this price in this date, the beginning of December. That's when the market was around this price again. So now I'm gonna put where traders got trapped. Okay, so traders got trapped right here. Peak formation. Traders got trapped right here. W formation. Traders got trapped here. Peak formation. Traders got trapped here. W formation. Okay, and so on and so on. Traders got trapped everywhere. Okay, this is W formation right here. These are trades we would actually take. So don't say you guys don't find any because I just marked up like 2 or 3 of them right now. Okay, so these are peak formations where traders got trapped. Okay, so now we draw horizontal lines. Traders got trapped long right here. Okay, because they pulled up, made people buy, and then dropped real quick. So you would put it at the top of the highest candle, the body of the candle. Okay, now you can draw another line right here. Okay, traders got trapped there. All right, you can draw another line right here. Traders got trapped short right there. Okay, you can draw another line right here. Traders got trapped right there. I don't think that line painted. Okay, traders got trapped there. I'm gonna make these lines thicker. That should be good. One second, I'm gonna check to see if anybody left any questions. Nope, I guess no questions so far. That's good. Either I'm explaining it very well or everybody fell asleep already. All right. Okay, so these thick yellow lines, gold lines, whatever you want to call them, are where traders got trapped. Okay. All right. So now what do? We shall go back to the current price. We marked up where traders got trapped. Go back to the current price. Okay. So look at this. All right. So now this is one of the take profits as well because this is a peak formation. Traders got trapped here. All right. Oh, actually, hold on. Give me 1 second. I have to go back to that price. Kind of messed up a bit. Okay, what I'm gonna do is I'm gonna highlight the ones where people got. Actually, I'm gonna delete the ones where people got trapped long, because remember it's an M formation, so we look for where traders got trapped short. Okay, I completely forgot about that. All right, so then this one as well. Okay, traders got trapped short. Traders got trapped short. Okay, we're good. All right, so now look. Whoa, that is crazy, isn't it? Damn, that's crazy. Wow, M formation form. You take entry off the close of the engulfing candle. You take entry. You drop. Hits your first take profit. It drops. Hits your second take profit. Look at that wick right there. Hits it perfectly, but hesitates to break it. Look at that. It drops. Look how close it was to hitting the third one. Look how close it was. It didn't want to release those traders yet. Look how close that was. This is why I always say get out on your first take profit, because that one is guaranteed. But when it drops and goes to the second one, you can hold it. You can hold the trade to the second one, but it's not guaranteed to hit. It's not guaranteed to hit. Yeah, I know it is though, Boston, huh? It surprises me every single time how well this stuff works, man. Every single time. It's just crazy how easy and simple it is, but I just got to get you guys to learn it, okay? So it drops, it hesitates to break this one, but it does hit your take profit. But it comes down to the third take profit, gets so close to it, but doesn't hit it. So your take profit wouldn't have activated while you were asleep. It would have reversed back up and you would have lost a little bit of money. You would have still been in profit. So I have a question. So that engulfing candle is the one from NFP? That's correct, yes. The one with the wicks on both sides, are the effect of NFP. Um, so yeah, that's the what NFP formed. Okay, it formed the M formation. Excuse me. It formed the M formation. I had Subway right now. This thing's hitting me weird. I don't know. Maybe I've been having too much tuna. I've been eating tuna almost every single day. Okay. 1 second. All right, I have a couple questions over here. I'm gonna answer real quick. So yeah, this NFP formed this formation, M formation. But once again, I'm telling you guys off of the formation that I see here, not off of the news. Once again, this happened on a Friday. I don't recommend you guys trading Friday. Why? Because traders get trapped. Where did traders get trapped? They got trapped long on this Friday. Okay, there was traders buying on Friday. Look what it did. NFP made an M formation and dropped. It trapped traders long. Exactly why I tell you guys not to trade Fridays. Okay, let me answer a couple questions that we have over here. All right, so that engulfing candle is the one for NFP. Yes. If so, would you consider the empty part of the sell side of that candle consider an engulfing? If so, would you consider the empty part of the sell side of that candle consider an engulfing side? Okay, it's not an empty side. It's the wick. Okay, this right here is the wick. It's not necessarily empty because price did go here. Okay, but that's one of the confirmations. Okay, I'm gonna repeat this. So on an M formation, so right here, you on an M formation, you look for an engulfing candle, right? You look for an engulfing candle. Okay, um, that's another confirmation onto the M formation. Okay, so what exactly does it have to engulf? It has to engulf the previous candle. Okay, so it has to engulf this blue candle right here. Okay, so what measurements can you use to verify whether it's engulfed or not? So what you do on an M formation, you can use the this top wick here. You can use all of this wick, only the top. You can't use the bottom. Okay, so you measure the amount of pips this long top wick has, all the way down to the lowest point of the body. You measure how many pips that is. That's 44 pips. Okay, so now you measure it to the previous candle. Okay, what do you do with the previous candle? You only use the body. You don't use any of the wicks. So you only count the body. Okay, you don't count any of the wicks of the candle that's supposed to be engulfed. All right, So let me repeat this. The engulfing candle on the M formation, you use the top wick and you use the body and measure it, comparing it to the previous candle. Okay, so then the previous candle, you only use the body. Okay, it only has to engulf the body of the previous candle. Now on a W formation, it's the opposite. The engulfing candle has to, you can use the bottom of the bottom wick with the body, and it has to engulf the previous candle's body only. Okay, hope you understood that. Austin, go ahead and reply now if you understood that. All right, so let me see if I have any questions. All right, good. Okay, so it's as simple as that. Engulfing is the engulfing candle is made, and it closes. You place your entry, bam, right here. Place your entry right after this one opens. It goes back up a little bit, okay? But let me tell you guys this. Don't be scared to keep the trade open until it hits your first take profit, okay? Price can, if you take your entry off after the engulfing candle, price can come back up and retest here, but it's going to hit the first take profit. It is going to hit it, okay? So you have two choices here. You can either close it when it's in the negative up here and it happens to retest, and then place another entry up here, or you can keep this one trade open until it hits take profit and look for other formations on different pairs. Okay, so it can do that. It has happened, and it can happen. It will happen. You will take a trade where price comes to retest again but fails to break it. Okay, it's going to hit your take profit, your first take profit. All right, so you can just wait it out and then maybe even place another trade up here when you have a better positioning. Okay. All righty. So now what I was going to explain to you guys before is this. So I told you guys it doesn't always hit take profit 2, take profit 3, or anything like that. It always hits take profit 1. Okay. But take profit 2 and take profit 3, anything above take profit 1 is not guaranteed. Okay. See how it hesitated to break this one? That happens. Okay. This wick right here actually activated your take profit, so you got pretty lucky there. All right. Now, this is a little strategy I'm going to show you guys. Okay. Everybody sees people catch a lot of pips and whatnot. I'm going to show you guys a way you guys can catch a lot of pips after your take profit 1 is hit. Okay. It's not risky. I'll show you guys right now. Okay. So you take initial entry here, right, off of this long red candle because the previous one closed engulfing. So you take entry. Okay. Now this is what you do. You place 2 trades for a sell. 2, not just 1. You place 2 trades for a sell here. Now, the first trade, what you're going to do, you're going to set your take profit on that first trade at the first take profit. Okay? Now, the second trade, what you're going to do, any guesses? Put your take profit at the second take profit. Okay? Now, so this is what you do. 2 trades here. 1 trade is on your first take profit. Second trade is on the second take profit. Okay, so how does that work? So one of them is going to activate once it hits the take profit. Okay, the take profit is going to activate. So it's going to take your set your take profit. So you can see where it goes. You'll see right now. All right, you'll see, Austin. So one of them is going to hit a take profit. Now the take profit number 2 is questionable. Something like that, Austin. I'll let you know right now. Watch. It's pretty close to that though. Good guess. Very good guess, actually. Um, 1 second, guys. All right, so you place two trades. One of them is going to hit the first take profit. Now you wait. You put your second take profit, and then you see what it does after it hits your first take profit. Does it bounce back up off of it? Does it? No. This one it didn't. Okay, it just broke straight through. All right. So now this is what you do. This is a trick. So on your second trade, you will place your stop loss. As soon as the first take profit is hit, you will set your stop loss to where the entry of your trade was. Okay? The entry of your trade was. All right? That's after only when it hits the first take profit already. When that one trade is closed because it hit your first take profit, that's when you put your stop loss for where you bought or you sold right here. Okay, this is where your stop loss would be. Look how close this what came to hitting that. Came pretty close, but it didn't hit it, right? So this is where your stop loss would be. Okay, now why is it going to be here? The reason, you can also put it to break even if you want. Wherever it is, I don't know what lot size you would be using, but you can put it to break even as well. Okay, so wherever your break even is, that's where you put it. So once it hits the first take profit, you set your stop loss. Only set your stop loss once it hits your first take profit. Okay, don't set it before it hits your first take profit. It has to be when it hits it. Okay, and why do I say that? The reason why is because if it hasn't hit your first take profit yet, remember I said it could come back up and retest the price. So there's no point of putting a stop loss if it still can come back and retest the price before hitting your first take profit. Makes sense, right? Okay. So that's why you do it when it hits your first take profit. All right. So you first take profit is hit. You set your stop loss. Okay, cool. Now I'm gonna wait to see if it hits my second take profit. All right. So what do? You place your second take profit on that trade. You place the price you want that second take profit to be. Okay. Now you wait to see if it hits it. All right. Now, if it reverses back up and hits your stop loss, then okay, you had a chance to try to get to your second take profit. Okay, you had a chance to get to it, but it didn't work out. My trade closed even, so that's fine. I don't care. I didn't take a loss. Okay. So you wait to see what happens. It came down. It actually hit your second take profit. Okay. So once it hit, wow, you got two successful take profit hits just right there. The first one guaranteed, the second one riskier, but you weren't really risking anything because you put your stop loss at break even. Break even meaning that if the stop loss is hit, you don't lose or you don't gain any money. Okay, so it comes down, hits your second take profit, um, and then bam, you activate your take profit, and then you take home two take profit wins. Simple and easy as that. Now you can do this for three take profits. Yeah, you can do it for three take profits, but the more take profits, the riskier. Okay, the more down the take profits, the riskier. The less it's gonna most likely hit. Okay, so this one came close to it. So let's say you did place a third take profit. Where would you put your stop loss on that? You would put your stop loss at the first take profit. Okay, so you entered here, you placed two trades here. No, you placed, you placed two trades here. Okay, so it comes down, hits your first take profit. All right, then you set your stop loss for your second trade. Good job, Austin. Very good job. He guessed second take profit. Really good job. All right, so comes down, hits your first take profit. Once it hits your first take profit on your second trade, you put a stop loss and you put a take profit. Okay, comes down and hits your second take profit. All right, so when this first take profit is hit, place another trade. If you want to try to hit the third take profit, you place another trade off of the first take profit hit. Okay. Now, why do I say it's riskier? The lower the take profit, I mean the higher the take profit, meaning take profit 3, 4, 5, 6. Okay. The reason why it's riskier is because if you place the third trade here to hit your third take profit, it can easily just bounce back up, and then that one you will lose. The second trade you won't lose because you have your stop loss at break even. But the third trade to hit your third third take profit, that one you can actually lose money because it could just bounce off of the first take profit. That's the reason why it gets riskier the more take profits down you go. Okay. So let's just say you did place your third take profit trade here. Okay. So what are you doing? You're waiting for the second trade to hit the second take profit. After that is activated, what do? The third trade you have, you set the stop loss up here, and then you set the take profit at the third take profit. Okay. After the second take profit is closed. So it's basically the same exact step from take profit 1 and take profit 2, except you're just moving from take profit 1, take profit 2, take profit 1 hits, take profit 2, take profit 3, take profit 2 hits, take profit 3, take profit 4. That's like a tongue twister there. Take profit 3 hits. Okay, so it skips. Okay, it moves on. It moves on. It's just like that. Okay. It's as simple as that. So you can see that it came down and went for this third take profit, but it didn't hit. It did not activate. So where's your stop loss for this one? It's at break even. It's at break even over here. Okay, wherever your break even is, that's where it is. All right. So now you just wait to see if that's actually going to come down and hit your third take profit, or you wait to see if it's going to hit your stop loss, or you just take out your money here. All right. So question. Now, just to review, you created those take profits from traps the buyers have entered in. Correct. Okay. So what are considered traps, or what traders got trapped? What are considered those traps? So consolidation is considered one. Peak formations is considered one. W and M formations is considered one. Okay, so you can see this gray box right here forms the W formation. Traders got trapped on that W formation. Up here, peak formation. Traders got trapped here, so you would automatically put a horizontal line here. Okay. Now, normally what I do, because remember, this is an M formation, so you look for where traders got trapped short. Traders in this bottom gray box got trapped short here, because the market went short really quick and then went long. So traders got trapped short because momentum induced them to sell. Okay. So normally what I like to do is separate the longs, trap traders to the shorts. So what I do is I just pick different colors for them. Okay. So you can choose blue for the ones that were trapped long, and then a different color for the ones that were trapped short. That way you know the difference. Okay. So back to this. So let's see. So these, you can see that prices bounce off of these lines, right? You can see that because these are support and resistance lines. These horizontal lines are support and resistance. Okay. The reason why is because these are natural market maker support and resistance, because these are where traders got trapped. These are where the market makers are hesitating to pass, because there's traders trapped there that the market maker does not want to let loose, does not want to give them a break. Okay. Simple as that. All right. So this is just one setup, perfect setup. And I just showed you guys how to take profit 1, take profit 2, and hopefully take profit 3. Okay? Simple as that. Hope you guys understand. I really hope you guys understand, because this has serious potential. If you guys have any questions, go ahead and ask me on any of the chats. You can go ahead and ask, and I'll go ahead and answer in the middle of the session, okay? So now, let's look for another formation. All right, so we have that formation. Now this, remember, this is a short trend, so you look for M's. All right, let's look on higher time frames. All right, another question. How often are you recognizing these M and W patterns? Are they easy to spot? Yes, they are easy to spot. The reason why is because I have made a clear checklist to what exactly you're supposed to look for on the M and W formations. If it does not go by your checklist, you do not trade it. It's as simple as that. You do not trade it if it does not mark every single thing on your checklist. Okay? So I'm gonna give you an example. All right, so right here, M formation. Okay? I mean, it looks exactly like an M formation, right? It did exactly what an M formation was supposed to do. But what's wrong with it? I mean, it's a downtrend, right? So you look for M formations, right? So what's wrong with it? Why wouldn't you take this trade? What have I taught you to not take this trade? First leg, draw horizontal line. Second leg broke the first. Oh no, but it has everything else on it. It has everything else. Like it made the first leg peak formation drop, came to retest it, and then it exactly, Matthew, exactly. Great, great. So an engulfing candle was made. An engulfing candle was made. Like I don't understand. Why is it that this is not a valid M? Like Matthew said, second leg broke the first leg. That is the only box that is not checked on my checklist. Do I take the trade? No. It's not a valid M formation how I'm teaching you. Yes, it looks like an M. Okay, it looks like an M. But you do not trade it because the risk becomes higher when that second leg breaks the first. Simple as that. As simple as that. So, Austin, it has to do every single thing on the checklist. Okay, so you just look for a peak formation, wait for price to come back and retest that peak formation, potential M that might form or W that might form, and then just wait for the candlestick patterns. The engulfing candle does not break the first leg, take entry off the close of the engulfing candle. Simple as that, okay? Simple as that. All right, now this did do what an M formation would do, right? Yeah, we are going to miss opportunities. We are going to miss opportunities, okay? But the point of trading is to minimize risk to the max potential that you can minimize it, okay? I'm telling you guys exactly how to do that. It's just your job to discipline yourself to only take trades of how I showed you guys to take the trades. That's all you have to do. I'm telling you guys what to trade, but now you have to do your part and trade only that. Okay, I have another question here. Let's see. After class, can we get that checklist? Yes, I'll go ahead and and write the checklist. I'll post the checklist down after the webinar. Actually, let me just go ahead and tell you now. You can write it down while I'm saying it. Okay, so what's the first thing on the checklist? First thing on the checklist is to recognize the peak formation, the first peak formation, which is considered the first leg. Okay, recognizing the peak formation. Yes, Tim, correct. Actually, yeah. So Tim pointed out something good that I should remind you guys. He asked, so only trade M's on a downtrend, W's on an uptrend still. So this is the rule here. Okay. I only advise people to trade. I only train people to trade from the 15-minute chart and above, nothing less. Okay. The reason why is because the 5-minute and the 1-minute don't necessarily follow the rules, so that they wouldn't be valid. It would be much riskier. Yeah, you could spot M and W formations there too, but it would be much riskier. Okay. Okay. So, what Tim reminded me to say was, so from the 15-minute chart to the 1-hour chart, you trade with the trend. From the 15-minute chart to the 1-hour chart, you trade with the trend. From the 4-hour chart and above, you can trade whatever W and M formation you see. Now, why do I say that? The reason why is because the 15 to the hour, you shouldn't trade against the trend, because that is what's happening inside of a trend off of the higher time frames. The higher time frames, so 4-hour and above, the 4-hour and above make the trend. The 15 and the 1-hour follow the trend. Okay. Once again, the 4-hour and above, it makes the trend. So if you see a W or M formation on the 4-hour or above, that's because the trend is changing. Okay. Simple as that, guys. All right. You guys just need to follow the rules and you'll get the results you guys want. All right. So, yeah, onto the checklist. Sorry about that. So the first one was recognize the peak formation. Okay. Second checklist. Second thing on the checklist is wait for price to retest the peak formation. Okay. Wait for a price to retest that peak formation. All right. So look over here. Peak formation. Peak formation. Peak formation. Peak formation. Peak. Peak. Sure you guys are getting the idea now. Peak. Peak. Okay. Draw horizontal lines on all of them. Horizontal line there. Horizontal line there. There you go, one horizontal line there. Bam, there. Okay. And I think that's all of them. Yep. Okay, let me delete that one. All right, so you draw the horizontal lines off the peak formations. All right, yes, that is very easy to spot, Austin. It's easy money, easy money. So, Austin, there's so many people that don't even know about M or W formations. I still have a lot of people to help out, so don't think it was just you that doesn't know about it. There's so many other people that didn't look into it. So you draw your horizontal lines. Now For each horizontal line, you wait for price to come and retest it. That's it. Price comes and retests it. All right, so you draw a horizontal line. This above one right here, the highest one, you wait for the market to come back up and retest that price point. If it doesn't break it, it forms an M formation. This will be considered the first leg. Simple as that. Simple as that. Okay. All right, so now checklist number 3. Checklist number 3. So checklist 1, recognize the peak formation. Checklist 2, wait for the market to come back and retest the price. Checklist 3, second leg does not break first. And once again, what do I mean by that? The body of the second leg does not pass the body of the first. The wick can pass. I want the wick to pass. Okay, the wick can pass, but the body cannot close above the first leg on an M formation. On a W formation, the body cannot close below the first leg. Okay, that's checklist number, I think that was 3. Jeez, I lose count very quickly. First one, peak formation. Second one, retest. Third one, does not close above or below. Your cat got starting to get annoyed at my voice, huh? All right. Yeah, checklist number 3 is price does not break the first leg. The second leg does not break the first leg. That's checklist number 3. All right. What's 4? 4, engulfing candle confirmed. Okay, engulfing candle confirmed. All right, that's number 4. I think that was number 4. I don't know, I lost count. All right, the one after engulfing candle is you take entry. Yeah, Jersey, I just said it now. Thanks for looking out though. All right. Damn, I forgot what number we're on now. It doesn't matter what number. You guys kept count. Engulfing candle confirmed. Okay. Then the next one after engulfing candle, take entry. You have to make sure that's on your checklist too, because you need to check that. You need to make sure you take your entry. Take entry. Then the one after that, take profit. Recognize where your take profit is and place it. Okay, 5 is take entry. Okay, then 6 is take profit. Recognize where your take profit is and set it. Jersey, yeah, 5 is technically all, but I want you guys to make sure you guys put your take profit down. Okay, I need to make sure you guys do that. Jersey, you're right though. You're right. All right, so 1 second. All right. Take profit, and that's it. That marks your checklist. All right. 1 second. All right, and that is it. All right, so let me see. All right, so checklist number 1, recognize first peak formation, which is considered the first leg, correct. Second, wait for price to retest peak formation, forming an M, making an M. It could also make a W. Remember that peak formation can also be the first leg of a W. So it's not just the M. All right, so check number 3. Okay, I'm going to verify number 3. Second leg doesn't break first leg on way down. No, you got it right, but it's not just on the way down. It could be on the way up. Remember, it's not just a M formation. It's on a W formation too. This checklist applies both ways. Exactly. Okay. Same exact rule for W formation. Same exact rule. All right. Step number 4, engulfing candle confirmed. Correct. Number 5, take entry. Number 6, take profit with trap zones. They're not necessarily zones, they're prices, but if that's what you mean by it, then yeah, you're right. Okay? So then you just recognize your take profit and you set your take profit and just wait until the price hits. That's it, simple as that. Now, I'm gonna warn you guys, this actually happened to me last week, and I'll tell you guys what happened to me last week. So let me see if I can show you guys actually what happened to me. All right, so I have a question, so I'll answer the question before I show you guys. My question is, if we are entering an M on the 4-hour chart, should we be expecting to hold this trade for a couple of hours or a day? The higher the time frame, the longer the trade is going to be. Okay, so look at this for example. Actually, no, that's not a valid formation. Let me show you guys a valid formation. That's too small. I want to show you guys a big W, that way it's clear. Okay, hopefully this one's one. Okay, right here. Okay. W formation. All right. Bam, right there. So you confirm that the first leg was made, peak formation. Now you wait for price to come hit it. Hits it right here. Remember, what do you do when you count the engulfing candle? You count the bottom of the wick and the body compared to the body of the previous. Okay, this is confirmed engulfing. Then you take entry off this candle and you write it up. This is the 4-hour chart. Each candle is 4 hours. So how many hours is this? This is 1, 2, 3, 4, 5, 6. 6 candles it went up. That's a day. Okay, that's a whole day that you had to hold on to this trade if you wanted to hit its max take profit. Okay. All right. So this is a day you would hold this trade or wherever your take profit is. Wherever your take profit is. So the higher the time frame, the longer the trade is going to be held. Okay. I was going to answer another. I was going to answer another question. Okay, so the higher the time frame, the more pips as well. That's another thing. But let me tell you guys this. The higher the time frame, the bigger the account you have to have. If you have a $200 account, only place 1-cent lots on swing trades like these, long-term trades. The reason why is because remember when I told you guys price can come down and retest for a third time? What if it does that? What if it comes back down and retests? You're going to be in the negative by a lot because this is the 4-hour chart. Okay? You're going to be in the negative by a lot. That's why I tell you guys, I'm telling you guys now, use risk management. The higher the time frame, the less your lot size should be. not the higher, okay? The less your lot size should be. Because each of these candles, they're more pips compared to the smaller time frames, okay? So make sure you guys use risk management with this stuff. And I'm warning you now. Don't say that I didn't tell you guys and whatnot. I'm warning you now. I'm telling you this now. And some of you guys are not going to follow the rules, and you guys are going to go against it because you guys are going to be greedy, and you're going to want more money. So you're going to place a standard lot on a $1 account. Okay, so don't just use risk management. Learn your lesson if you go against the rules. Okay, and don't make the same mistake twice. Okay, just make sure you guys keep learning. You don't want to make the same mistakes twice and just disappoint yourself for no reason. Okay. All right. So now, if we have the confirmation of all the checklists, then is it bad to go big lots wise on an M or W trade? Okay. So basically, he's asking if the M or W formation marks off everything on the checklist. If M or W marks everything off of a checklist, can you increase the lot size? You can increase the lot size depending on your account size if it can take it. But like I was saying before, if the market comes down and retests the low for a third time, your account better be able to handle that. If your account can handle that and you won't be losing that much, then yeah, go ahead and place a little higher lot size, okay? But it can come back down and retest. Just make sure you understand that, okay? All right, so can you give me an example on number 3 so I can understand a little bit more? Okay, number 3 was second leg does not break first leg on the way down, or second leg does not break first leg, period. Okay, so remember when I told you guys to draw horizontal lines where traders got trapped and wait for the market to come and retest it? Okay, so right here, this is a perfect example. Peak formation is made right here. Peak formation is made. Okay, so you draw a horizontal line on the bottom of the lowest body candle. Okay, now you wait for market to come and retest. When you wait for the market to come and retest, you're basically retesting this horizontal line here because that's the same thing as where the body of the candle is here. So you're looking to see where the candle comes here, and so the body of the candle is what's colored. Okay, that's the body of the candle. You do not want the body right here to close below this line. Even if it's a micro pip below, it cannot close below the first body of the first leg. Okay, you don't take the trade. That's what's considered breaking the second leg. That's what, when I say break, when it breaks the second leg, I mean the first leg, it means it's not a valid formation. It means that this body, the second leg, the lowest body of the second leg closed below the lowest body of the first leg. Okay, so this is an example of a valid one. I'm going to show you an example of an invalid one, just so you get the idea of the difference. Okay. All right, right now, show you guys a better one. Okay, no, not that one. By the way, I still want you guys just to be cautious of trading against the trend off of the 4-hour as well. The reason why is because if rules still apply. That's why I want you guys to set your take profit at break even. I mean your stop loss at break even, because it's always risky to trade against the trend. but you'll catch good setups on you can catch good setups on higher time frames, 4 hour and above. But it's always riskier to trade against the trend. Just remember that. Okay, right here. Okay, so right here, W formation. Okay. All right, you guys see that? W formation. Okay. First leg, second leg. Okay. Why is this not valid? The second leg broke the first. Okay, so you draw a horizontal line on the first leg of the lowest body of the candle. Did the second leg close below it? Yes, it did. Look at that. It closed below it. Yes, it still did what a W is supposed to do, but it closed below it. So you don't take the trade. Okay? You don't take this trade. This is what I mean on the third step. To make sure that the body of the second leg does not close lower on a W of the body of the first leg, or higher on an M formation of the first leg. Okay? That's what I mean by it. Now, Austin, if you could reply that you understand that, that would be great. If you don't understand, I'll go ahead and show another example. Okay, good. All right, so that's basically it for today's webinar. Not even a micro pip, exactly. Not even a micro pip. All right. Exactly, past first leg. Not even a micro pip, past first leg. All right. So you got the point. Good. Okay. So that's the lesson for today. That's the lesson for today. Hope you guys learn how to enter and exit and trade a WNM formation. Okay. So if you guys have any questions, you guys can go ahead and message me or anything. Hopefully after this, you guys are capable of trading and being able to find entries and exits, take profit areas. Time frames that I normally look at is 15-minute through the hour. Why? Because I don't have to swing trade, basically. I can just enter and exit on the same day, just within a couple hours. That's the reason why. I place a little bit higher lot sizes off of those. Right now, I'm actually working on a little, like not a competition. I'm just flipping an account, so I'm gonna change $10 account. I started with a $10 account again. I've tried this before, back when I was a horrible trader, but I was horrible, completely horrible at trading. What I try to do is I try to show off by opening a $10 account and trying to flip it to, like, I don't know how much. That was like 6 months ago. And then I decided to do that challenge again. And now I'm flipping it to a couple thousand. So I started with $10 account and I'm flipping it to a few thousand actually. So traders get bored. So you'll understand once you start making money consistently. You'll want to challenge yourself and whatnot. So right now that's what I'm working with. But yeah, just make sure you guys understand how to trade these stuff. And I'm glad Austin, you were able to learn some stuff. Okay. Just keep on it with the training videos. If you don't understand it, ask. Don't hesitate. If you guys want to be successful in something, in anything, you have to put in the effort to try and understand how to be successful in it. You can't just watch. You can't just listen. No, you have to understand, and you have to be patient with the results as well. You're not going to see it overnight. Okay. So use risk management, be patient, and understand the material, understand your strategy, understand the checklist. And after that, you guys will have it. Okay. So next webinar is Thursday, same time, 11 p.m. Pacific time. All right. And good luck trading. It is officially now not trap day. So you guys can trade already. Wait until London open though. There's no market maker between Asia and London. There's a 30-minute gap. Okay. So if there's a formation, yeah, go ahead and trade it because it's not trap day anymore. All right. So good luck trading this week, and I will see you guys on Thursday.